This is the Almost Timely newsletter for the week of March 12th, 2023. What's on my mind this week? Broken agreements. Let's talk about agreements for a moment. Marketers like you and me have had implicit agreements with various technology companies and firms over the years. We've had agreements that were more or less mutually beneficial. Right? We do something, we get something in return, sort of a quid pro quo. For example, we created something of an agreement with search engines like Google, right? In exchange for quality content that satisfies user intent and makes a search engine relevant. The agreement was that we would get customers or potential for customers in return. We make content, adhere to Google's guidelines, we get visitors on our sites. We had a similar agreement with social media, right? We actively participate in places like Twitter or Facebook or Instagram, and in exchange for that participation, we get to interact with potential customers and win some percentage of them over to being our customers. These agreements have largely worked for the last 25 years to varying degrees of success. Early on, as technologies and companies debuted, the balance of power was in the hands of the marketer, the hands of the audience. We had the audience to some degree, and we had the ad dollars to spend to keep us happy. Early technology players sent us a lot of business. Those who were around for the golden years of social media, we're thinking 2005 to 2010, will recall substantial double-digit percentages of new traffic and new customers coming from unpaid organic social media. Those were the days. Over time, that balance of power has shifted. Companies became dependent on easy, in most cases, free traffic. Organic search and organic social media powered entire generations of startups, built huge empires for online bookstores to streaming media companies. And in some cases, the balance of power today has shifted so far in the opposite direction that it's effectively more or less broken. Don't know what I mean? Ask the average social media manager at the average company how much traffic and how many conversions come from unpaid social media. And it's going to be a tiny fraction of a company's overall conversion drivers. Now, there will be some folks who say, well, no, organic social still works. And yes, there are situations where organic social still works. Believe me, I've had firsthand experience with this with the whole Save Warrior Nun campaign. Thousands of people, highly motivated, are able to steer an AI algorithm. Your average corporate marketer doesn't have access to that kind of audience. Certainly, the audience doesn't have that much passion, and therefore the performance of unpaid social media for your average marketer is not great. Organic search isn't much better, right? Over the past 5 years, we have seen search engines, Google in particular, gobble up ever-increasing percentages of clicks. Way back in 2019, in the old days, Rand Fishkin and the folks over at JumpShot calculated that Google, for the first time in 2019, was consuming more than 50% of visits and clicks for itself with its instant answers, right? You go search for a movie near me or a restaurant near me, you get an answer and you never leave Google. Right? Google just starts vacuuming up more and more traffic for itself. Why are we talking about this? Well, the evolution of large language models threatens to change that balance of power even further. As companies of all kinds integrate the usage of large language models like GPT-3 and ChatGPT, the web interface, into their products, we're going to see more and more forms of search and conversation taken up by machines. For example, Snapchat just announced they have a chat companion in-app for paying members called My AI, and you can have conversations with it. We've seen large language model-based chat companies like Replica do astonishingly well at offering virtual companionship. And of course, we see Google's Bard, Bing with ChatGPT, and of course the ChatGPT native interface, all consuming ever more attention through the use of large language models to provide information and entertainment to people. That's all traffic that never leaves these services. So this raises a critical question for marketers. What do we do when the agreement between us and large technology companies is simply broken? Well, the short answer is You do the same as with any broken agreement. You either renegotiate or you walk away. When I mentioned this to the audience this past weekend at PodCamp Philly, a few marketers were understandably concerned. Like, we can't walk away. How do we get new audiences if search is out of the picture and social media isn't working for us? This was common sentiments. How did you earn business in the pre-digital era? How did you earn business before social media? The answers should hopefully be fairly clear, right? Word of mouth marketing, which is timeless, has been in existence ever since our ability to communicate, along with advertising, and these days with influencer and community-based marketing. We have said for decades now that the best way to market in the macro picture, in the big picture, is to pretend that services like Google and Facebook, etc., don't exist. Right? If they weren't available, how would you do your marketing? What would you do differently? What would you do? The reality is many marketers, especially marketers who are younger, under 40, and don't remember marketing in the pre-digital era, they may just not have been in the workforce at the time, marketers have become addicted to the relative ease of digital marketing. Marketing where you don't have to leave your desk. I mean, yeah, that has a distinct appeal, and companies love it too because that scales better and at lower costs. But nothing lasts forever, and no channel, no strategy, no tactic ever remains supreme for very long. Here's the part that people don't want to hear. There's more to marketing than digital, and there's more than one way to acquire a customer. There's more to the world of marketing than just digital marketing. As a marketer who considers myself digital, a digital native, yeah, that kind of stings a bit to admit, but it's true. There is more to the world than just what's on our devices. Now, that said, in the realm of digital marketing itself, we're going to need to plan to spend more, right? On ads, because that will be the reliable reach method in digital for a lot of companies, and on squeezing what performance you can from unpaid channels. You should plan to pivot to influencer and community-based marketing if you haven't already, right? Where you, instead of maybe spending a bunch of money on an ad, you would find someone else who has your audience and work with them, partner with them to market to their community. Build and nurture your email list. It's like it's made of gold, because it almost literally is. The ability for you to reliably reach people with no intermediary is almost priceless. And look to where attention is, but marketing isn't. Where are those places where the people are and their attention is, the marketing isn't? One of those places, the real world. When we see the explosion in events and conferences and vacations and concerts and things, after 3 years of a pandemic, people are kind of champing at the bit to go out and experience their version of reality again. That's where the attention is. The most successful marketers follow the attention of the audience to wherever it flows without falling in love with any particular channel. You do what works on any given day with your audience. That is the only guaranteed long-term formula for success with marketing. Stay with your audience wherever they go. All right, let's see what else is happening in the news this week. A bunch of new posts. I did a piece on answering the question, which parts of marketing will be revolutionized by AI? I mean, you can pretty much guess the answer is all of it, but I had some more thoughts on that, plus answering some questions. I'm going to have a bunch of new questions to answer this week, too, so stay tuned on the blog for that. A lot of folks have signed up for the LinkedIn course, and it's free. Go check it out. That's in the newsletter. If you just want to type in and go to trustinsights.ai/LinkedIn course, all lowercase, you'll find your way there. In jobs this week, senior analytics consultant at REWE Group, digital analytics lead at Incubata, experimentation data scientist at Shutterfly, lead analytics engineer at Displate, senior data scientist at GoPuff, and web analyst at Telia. So some new positions and things to check out there. Also in the news, TikTok introducing a series feature enabling creators to sell premium episodes, a new trend called de-influencing, which I think is fascinating. This is de-influencing is when people review stuff and basically tell you not to buy it, right? It's like, hey, I got this thing and it sucks. Don't buy this thing. Avoid this thing. It's a real challenge for some marketers, and there's a good chance that, particularly if you work in B2C, but even in B2B, there's a good chance that you're going to feel the effects of this at some point. It is reviews on crack. It is risky territory for marketers, right? Because you may see a competitor get lambasted, and you're like, should we do something with this? Should we place off of this? And then go, do we want to attract the same level of attention? But it's a fascinating trend. It's worth checking into to see what it's all about. In other news, we have DuckDuckGo building AI-generated answers into its own search engine, which I think is very interesting. Microsoft wants to incorporate generative AI to be a co-pilot in enterprise applications. OpenAI's GPT-4 supposedly arriving in March of this year. We will see if that is in fact true or just someone's idle speculation. It is going to be a larger language model, so it's going to get better performance. It will take up more resources, etc., etc. And of course, in all of the news this week, everything about Silicon Valley Bank and stuff. So if you are negatively impacted by that, I'm sorry. If you are not negatively impacted by that right now, just be aware that a bunch of companies are affected by this, and a whole bunch of companies never learned the lessons from the 2008 banking disruptions. There were a lot of things happened back then that was the expression. History doesn't repeat, but it sure does rhyme. This is rhyming. Upcoming events, March Echope at the end of March. I'll be in London for that. Use code MARSpeaker20 for 20% off the ticket price if you want to attend that. B2B Ignite Chicago in May of this year. Marketing Props B2B Forum in Boston in October. Looking forward to that event as always. So those are the upcoming events right now. There's a few others that, again, still working on the paperwork for them. So if you have an event you'd like me to come talk about let me know. Just drop me a line. Hit reply on the newsletter. That is the news for this week. Thank you for being here. Thank you for tuning in, and I will talk to you soon. Stay safe.
If you like this video, go ahead and hit that subscribe button.